I think that, I mean, we're going to unleash the American economy. We'll have massive efficiency in government spending, which then again would lower regulations and sort of take that boot off the neck. I don't see how that'd be bad for Bitcoin at all. The reality of that is that unleashing the American economy is probably going to be inflationary. So people aren't going to like to hear that. I'm an inflation bull. I think the rest of this decade is highly inflationary for any number of reasons. And this would be one of them. It's going to create more inflation, which will be good for Bitcoin. And people are going to need a way to protect themselves from inflation. And Bitcoin is that. So if anything, I would say it's going to be good for Bitcoin, not bad.
Bitcoin's current trajectory has captured the attention of investors worldwide. But according to renowned investor and entrepreneur Mark Moss, we're only scratching the surface of its potential. According to Moss, there will be a significant change in the next 12 to 24 months as banks begin to include Bitcoin into their services and institutional investors scramble to get their hands on the market. It is anticipated that sovereign states would also accept Bitcoin, propelling its uptake to previously unheard-of levels. In this dynamic environment, changing international regulations and increasing economic pressures may serve as a trigger for Bitcoin's price to soar to previously unthinkable heights. As Mark Moss shares his thoughts on the future of Bitcoin and the macroeconomic forces driving its growth, you'll learn why this could be the most important moment to fully understand the asset's potential. Now, let's return to Mark Moss's insights from his interview. To stay up to date on the most recent Bitcoin and professional predictions, be sure to hit the bell icon and subscribe to our channel. Now let's hear his following words.
A lot of people were disappointed in the price of Bitcoin because it was basically stuck in a range for like 6 months. There's a lot to say about that. One thing I would recommend, I constantly try to remind people of is, so this was, August, September-ish, right? Before the price really started moving, is I said, look, it hasn't gone anywhere in 6 months, but it's up 150% in 12 months. Like, that's pretty dang good. Like, from a macro investor like me who's been doing this for a really long time, 100%, 150% in 12 months is amazing. And so, number one, zoom out, man. Like, if you're expecting your assets to move inside of 6 months, like, you're just never going to make it. And another reason why they were getting disillusioned is because we saw the assets starting to pump. So the stock market was still holding up. Gold was taking off, making new all-time highs. We saw global liquidity going up, but yet, Bitcoin wasn't moving. And typically, Bitcoin is like this most sensitive asset. And a lot of times it starts to front run. It's like this canary in the coal mine, if you will. But Bitcoin was lagging the liquidity and the gold moves. And I made some videos and kind of broke down some charts and showed that there's, up to about a 6-month delay. And I think that's where we're at, right? Bitcoin caught up. It made its big move. It was a little bit behind the curve a little bit. And here we are. Yeah, we're blasting off, right? The gold demand is not because you and I are buying more gold jewelry, buying gold ounces for our safes. It is nation state demand. And really, that was a big driver of gold. And yes, to your point, it's going to be a massive driver for Bitcoin. I think I made an off the cuff video that went pretty viral, just saying, like, people are not bullish enough. I don't think the market has front run this. And that was like a week or two ago, but I do think the market is now catching up to this reality that we started to see this like institutional FOMO, if you will, back in 2021. And it's been going, and we are seeing the institutions starting to FOMO in. The problem is it takes a long time for the institutions to move, to change their fund mandates or the legal compliance, things like that. There's reasons why institutions can't move in because there hasn't been a functioning options market and things like that. But now we're starting to see the sovereign FOMO. And the kind of the key to what I was saying, why people aren't bullish enough, and I think they're just catching on, is because what we saw with El Salvador being one of the poorest countries in the world, when they adopted Bitcoin, it wasn't like they're influencing a lot of nations. Like, nobody's really paying attention to that. But what's happened in El Salvador since, right, turning their country around, taking care of crime, massive amounts of influx of investment capital coming in. And now at Bitcoin, when Bitcoin hits $100,000, El Salvador is able to pay off their IMF debt. It's never been done before. That doesn't happen. The IMF debts are strategically made in a way to keep those nations enslaved forever. And when they can't pay the debt, they just add more debt to pay the old debt. And so to pay off the IMF debt is insane. And now, again, they're not influencing the world, but they are influencing other small countries. So now Bukele has been meeting with other heads of small nations, Omar, Sudan, UAE, etc., and they're starting to move on Bitcoin. So we're seeing that. That's like the bottom-up approach. But if the United States, the global homogeneity, the US dollar, the reserve currency of the world, if they were to take on a strategic Bitcoin reserve, then every other nation is forced to do so. It's the way that game theory plays out. So in the world of investing, just like most of the world, it's competitive. And if a fund were to add a little bit of Bitcoin and outperform the other funds are forced to respond to that, which is what we're seeing in the institutional FOMO. But if the US does it, every other nation is forced to. We're talking G7 nations, G20 nations. I believe these other nations have figured this out. They didn't know what was going to happen on the election, because obviously if Kamala won, that was not going to happen. But with Trump and RFK Jr. both running on this policy and a bill already submitted in and having a red wave through both the House and the Senate and the presidency, the likelihood of this going through is extremely high, in my opinion. And the other nation states are starting to realize this, and word on the street is these nations are now FOMOing in.
Bitcoin is quickly emerging as a major player in international finance and is no longer merely a niche investment. According to Paradigm CEO Matt Wang, Bitcoin is similar to revolutionary technology like gunpowder in that once it is found, countries must either embrace it or risk falling behind. Abu Dhabi's sovereign wealth fund is actively mining Bitcoin, and El Salvador has already incorporated it into its economy. Also, Senator Cynthia Lummis has sponsored the Bitcoin Act to make the strategic Bitcoin reserve that Donald Trump repeatedly referred to in the United States a reality. Mark highlights that early adoption of Bitcoin will give countries a significant edge, obtaining a strategic lead and locking in reduced pricing. The rush to accumulate reserves will undoubtedly get more intense as more big governments accept Bitcoin. The idea that the United States would soon create a Bitcoin reserve is no longer ridiculous, according to more than 30% of prediction platform experts. If this occurs, it might set off a series of events that integrates Bitcoin into governments' financial plans all around the world. Let's turn to Mark Moss for his perspective on this news.
Yeah, we're certainly going to see a domino effect, and this is the beauty of the United States. The United States is not a democracy. Let's get that clear. We are a constitutional republic, and the key to this is it's a decentralized form of government, right? So all 50 states are supposed to be independent, but the beauty of this is that it allows us to then try and test different things. And so we see these experiments playing out in real time, and this is one of those experiments. So we've seen already multiple states have passed laws to, for example, enshrine rights to mine Bitcoin. So as like New York has tried to be aggressive and ban Bitcoin mining, other states like Montana have said, no, you have a right to mine Bitcoin in Montana. Other states now have put other bills in place that guarantee your right to custody Bitcoin. And now the Pennsylvania one is now potentially to put Bitcoin on the reserve balance of the state. And so certainly we're seeing this play out in multiple states in different ways. And if it works really well for Pennsylvania, like we hope it certainly does, then of course it's going to influence, back to that game theory, it will start to influence what the other states do. And it'll be highly contagious. Now, my guess, the red states probably go with that because they like to have a balanced budget and have a surplus. And the blue states probably continue to wreck themselves. But that's another topic. But I certainly do think this is the start of something really big. I think it's going to happen at the federal level. I mean, let's just talk about it at the federal level for a second. So, number one, RFK ran on this platform and laid out a very detailed plan of exactly how he wanted to do it. He didn't win the presidency, but he folded in with Trump, who also ran on about the same platform. So we have two people who see eye to eye that are now together that want to do this. But more importantly, Senator Cynthia Lummis from Wyoming has already submitted the bill. Like, it's already going through the House. And we know that with a red House and Senate, and then obviously with Trump in presidency, it has a high chance of going through and getting signed. And even if it were to fail, we'll probably get another one that will go through. They're saying, originally Senator Lummis said that she wanted to get it through within 100 days of Trump taking the presidency. Now they're saying it needs to go through even faster, potentially up to 30 days after. And I think it's going to happen on a federal level. And then every state will probably just move right into it. Right now, we have about 325,000 Bitcoin per year get created. Okay. Now we have the U.S. saying they would buy up to 200,000. We have Michael Saylor at MicroStrategy said that they plan to buy 42 billion over the next 3 years. Now, we don't know what the price will be in 2 or 3 years from now, but let's just take it at face value where we're at today. That means that Michael Saylor buying 42 billion just at today's current price is about 175,000 Bitcoin per year. So over half of the supply. Then you add in another 200,000 from the US. Now you're looking at more than all Bitcoin being created. Now, what's interesting about this is that Michael Saylor has proven that he is not a cost-based buyer, meaning he just buys on regular intervals, whatever the price is. The other thing is nation states are also not cost sensitive buyers. Nation states, when they buy, they just buy. They're not traders. They're not Wall Street funds, right? They're just going to buy. So basically what that means is we have just two buyers, and we're talking about institutional FOMO, and we're talking about sovereign nation-state FOMO coming in. But just these two buyers right here are committing to buying more Bitcoin than is being produced. And so what that does is it creates a floor, right? Supply and demand. Fixed supply, as the demand increases, they're buying more than is being produced. That means we have this steady, consistent buyer coming in. Then you add in the sovereign FOMO, and I mean, we're setting up for fireworks here. I think that, I mean, we're going to unleash the American economy. We'll have massive efficiency in government spending, which then again would lower regulations and sort of take that boot off the neck. I don't see how that'd be bad for Bitcoin at all. The reality of that is that unleashing the American economy is probably going to be inflationary. So people aren't going to like to hear that. I'm an inflation bull. I think the rest of this decade is highly inflationary for any number of reasons. And this would be one of them. It's going to create more inflation, which will be good for Bitcoin. And people are going to need a way to protect themselves from inflation. And Bitcoin is that. So if anything, I would say it's going to be good for Bitcoin, not bad. And most people think that Trump just lied and didn't get anything done in his first presidency. But here's something that gives me hope. So when he took his first term, he said that for every one new regulation that got passed, he would repeal two, one in, two out. Now, when you look back at the results of that, he actually got 2.5 out for every one in. So we have some precedents for this. It did work. He did exceed what he had committed to do. And he was under extreme pressure and fight from the government, if you will. And so now with Elon and Vivek, I mean, maybe we can get a lot of these regulations pulled back. I'm extremely optimistic about it.
Mark Moss offers a convincing conclusion that connects the factors influencing Bitcoin acceptance with its wider economic ramifications. He highlights that states can experiment with Bitcoin-friendly regulations because the U.S. government is decentralized, which can have a ripple effect. The advantages seen in these studies will probably encourage other states to follow suit, as more established pro-Bitcoin legislation, such as Pennsylvania perhaps adding Bitcoin to its reserves. Moss emphasizes that political pressures at the federal level, including Senator Cynthia Lummis's Bitcoin Act and Donald Trump and RFK Jr. joint vision, are important influences behind the acceptance of Bitcoin. He emphasizes the revolutionary influence of sovereign nation-state interest and institutional FOMO, fear of missing out, forecasting that demand for Bitcoin will soon surpass supply, driving up prices. The introduction of Bitcoin options markets, which could enable large capital inflows by enabling these funds to hedge their investments, is one of the issues and solutions that Moss discusses for institutional investors. He ends on a positive note by arguing that these events not only pave the way for a Bitcoin price boom, but also for increased economic efficiency in the United States, even though they may have inflationary consequences that strengthen Bitcoin's position as a hedge against currency devaluation. If you found Mark's insights valuable, don't forget to like this video, subscribe for more in-depth discussions, and share your thoughts in the comments. Together, let's explore Bitcoin's fascinating future and its revolutionary possibilities. Thanks for watching.